Hi everyone, welcome to Your Value. So today we're going to talk about Workhorse because, well, it is down 47%. So there is a few things to talk about. Of course, first thing is that they didn't get the USPS contract, which a lot of people were hoping that they were going to get, hence why the run up of the share price. So originally the stock was trading around that $20 zone, and then it got to a peak of like $40. So there was a lot of pricing in that they would potentially get part of the contract or all of the contract, which would have worked so well for this company. Yet they didn't get anything of this contract, so the stock price dropped to $16.47, giving just shy of $2 billion in terms of valuation. But it's not a great situation. But again, I think this is a type of company that still has a lot going for it. Even though I think there's a lot of news, a lot of videos online that just talk about things being hopeless, the fundamentals being gone, the company not having enough money. I don't see that. Firstly, I think if people put too much hope on this contract, on this USPS contract, and things didn't turn out well, stock price cuts in half because it kind of brings it down back to this $20-something level. It does take away the high potential of the company, but I think you just have to look in this press release situation where, hey, they've got actually an order for 500 of the vehicles, and then there's another order here for 6,320 of their vehicles, and that's enough for them to produce for the next 12 to 24 months. So there's really no even if they got the contract, they wouldn't be able to produce that many vehicles for the next few years anyway. So I think there was a lot of hope and potential being built into this company, but at the end of the day, there's still some very strong fundamentals of this company. It just wasn't worth $40 that everyone had put it up to, and it kind of dropped, of course, once the potential had kind of sort of gone away. But there's still some strong fundamentals. So firstly, they've got contracts to produce more vehicles, 6,300, and another 500 there, so close to 7,000 vehicles, and I'm sure they have other vehicle orders in the pipeline. So and it's here, Workhorse closes $200 million financing from institutional investors, and also they own 10% of this company called Lordstown. So 10% of $3 billion is at least $300 million. So if they ever need the cash, they can just sell the shares of Lordstown onto the market and just get a nice cash flow from that as well. So it is not as hopeless as people are putting it right now. It's not an ideal situation, of course. That's the problem when you invest in a company and hope for a situation to really either turn out really well or not turn out at all. And the problem is sometimes it does work against you, and the situation did not work in your favor if you're a shareholder. I'm personally not a shareholder of this company. I was skeptical around the potential of the company. I don't exactly have a lot of I'm not exactly favorable on companies that only target one small segment. I think their vehicles are very niche market type of stuff that you probably want to just I don't think the potential was ever going to be that large. Even if they'd got that contract, what happens afterwards when they don't have that contract anymore? I think a lot of people thought the contract's going to give it a lot of potential, it's going to be able to expand quicker to basically meet that contract. Though it's one of those things that, hey, it didn't work out, but the fundamentals aren't gone. There's still some pretty decent things around the company that still could lead it to to grow more. So at this situation, if you're still holding, then you've got two situations. You either sell it and buy something else, or you hold on to it and just wait for it to come back, because I think such a company still has potential in it, and it will still come back over the long term. Once they start producing their vehicles, I think things kind of start climbing again. Or if the share price continues to drop, I think it actually creates a situation where you can actually start buying into the stock with some decent fundamentals. If it either drops below 1.5 billion, I think that's a real good buying opportunity. If it drops even more than that, then I don't believe that would happen. But if it ever did drop below $10, I think that's the buy of the century, because you're getting so much value. If it ever goes closer to a billion, then yeah, then 2 billion. But this market recently hasn't been in its favor. Everything has just sold off really rapidly, so stocks have been down for at least the past week or more. And yeah, it just didn't really help that, hey, Tesla had a sell off, CCIV had a big shocker and sold off as well, which kind of just leads down the road that, hey, Workhorse literally chose the wrong day to have a contract not work out for them. If this was any other day, then maybe it wouldn't have been so bad, but literally today was the worst day you could have the contract not working out. And yeah, like, it's just never nice to see basically your investment get cut in half, and that is the reality of the stock market. That is the part of the risk when you buy into a company whose stock price runs up based on a contract. And yeah, shockingly, the contract didn't happen. Things fell a lot, and yeah, it's not fun. It's not ideal. It's reality. And I think you just look at what you can do. And basically the next step. And the next step is either hold for the future, sell and look for something else, because there is a lot of other companies that are selling on for a fairly good pricing. Like, I mean, Tesla's in the 600 zones now, so if you prefer something with a stronger long-term potential, Tesla's always a decent one, and over the longer term, I guess you can recover your losses on that, or you can also double down if Workhorse pricing continues to go downwards. It creates an opportunity, because I think there's a lot of pessimism in the stock that it doesn't have much going for it, but I believe it has a lot going for it. Like, the only thing is it didn't get a large contract. It still has many other contracts. It still holds 10% shares in Lordstown, which is worth $300 million. So I don't think this company is, like, it's not in a dire situation completely. It just didn't get the contract. And if you were buying into a company based on just one contract to make or break the company, then I don't think that's not quite the way you want to buy into businesses. You want to buy into businesses that, have some diversification in their revenues and their potential. Or else, if your whole basis of a company is based on one contract or one customer, it's never that great. And with Workhorse, that's the skepticism that I bring, especially when you do vehicles that are mostly just for delivery. If you're doing vehicles that are focused just on delivery, then I do think it puts you in a bad situation, because what happens when that side of the business gets heavily affected? I always like businesses that can pivot towards different areas. So, like, if we look at Tesla, right, they produce more than one type of car. If they only produce one type of car, then it's never that great, because you can't diversify where you generate your revenue. And the same thing as Workhorse. They kind of probably could have been, like a more well-diversified company. They could have done more delivery-style vehicles, not just like a big van. But yeah, I think that's just the reality of this company. That's what they're focused on, and if you're investing into that type of company, I guess you got to have that belief that, hey, this is going to do really well. And I guess, like, the contract just didn't work out today, and you basically just gather your thoughts. Do not dwell on a loss. If you dwell on a loss, I think it just makes, firstly, you can't like, you can't reverse the decisions. Like, if you've invested in this, you held this long, and you wish you'd sold out like a day prior, then maybe that would be nice. But the reality is, if you didn't sell out, you're looking at a loss, and the next best thing is, what do you do next? And from my analysis of this company, I've known this company for a long time. And I think it's still in a good situation. I believe it's got some decent contracts, it's got a decent future, and yeah, I think it still will probably generate more value going forward. It just didn't get that large contract that everyone thought would really take this company forward. And instead of that, this other company got this contract, and it only went up 6%, which is mildly shocking. But of course, this company was really trading like I guess it kind of did run up from about $60 to $70 to like over 100. But like yeah, the amount of surprise when this company gets this contract and it only goes up 6%, valuing this company at $7.49 billion. I think the reason this company got chosen for the contract is it has a lot of facilities that are already set up, whereas Workhorse doesn't have those type of facilities set up, and it does rely quite heavily on, say, like Lordstown to contract for them to build some of the vehicles. So maybe that was part of the consideration of why they didn't get the contract and why things fell. But you also have to look at this situation of like Fisker, Workhorse, Hyliion, Lordstown, they all dropped. So I think it was just a really bad timing as well. And once Workhorse starts releasing more positive things again, I think momentum comes back to the stock. But again, it would come back to this $20 level, and at this $40 level, I don't think you ever see this for a while longer. Like, it would take quite a lot for it to boost back up. But that's what I'm seeing anyway. Let me know what your thoughts are, or if you've got any questions, post below. Until then, good luck investing, everyone.